Welcome back to ABC News Live. It's time now for Ask Alexis, where our business reporter Alexis Christoforous shares some financial advice on topics that matter most to you. Today, she's answering your questions on the collapse of two regional banks, Silicon Valley and Signature Bank, what it means for your money. Alexis, what do we need to know?
Well, I can tell you our viewers are on top of it because they're asking questions about the story of the year, really. I want to start with Amy from Tualatin, Oregon. She asks, what does the FDIC cover, and are all of my bank accounts insured? Well, the good news, Amy, is that most Americans are covered by the FDIC because the majority of people have less than $250,000 in any one eligible bank account. So the Federal Deposit Insurance Corporation, or FDIC, was actually created back in 1933 during the Great Depression to restore trust in the American banking system. The agency will insure up to $250,000 per person in qualified accounts at insured banks on things including checking and savings accounts, money market deposit accounts, CDs or certificate of deposits, individual retirement accounts or IRAs, cashier's checks, and money orders. The FDIC does not cover things like stocks, bonds, mutual funds, crypto assets, life insurance policies, annuities, municipal securities, safe deposit boxes and their contents, or U.S. Treasury bills, bonds, or notes. Those are actually backed by the full faith and credit of the U.S. government. Our next question comes from Chris in St. Paul, Minnesota. He says, my wife and I own a small business and have more than $250,000 in the bank. What should we do to make sure our money is safe and insured? Well, here's the good news. The FDIC, as we said, covers $250,000 for individuals' qualified accounts, but also up to $250,000 for each co-owner of a joint account. So a married couple, for example, is eligible for $500,000 of protection on a joint bank account and $250,000 for each of their individual accounts, for a total of $1 million in coverage at just one single bank. If you have kids, you can also spread some of your money into accounts for each of your children or other beneficiaries within your family, and those can take the form of what's called a revocable trust account. And of course, you can always open up accounts at other FDIC-insured banks to hedge your risk. Bottom line here, bank failures are extremely rare, but they are a good reminder to be aware of where your money is held and not to have it all in one account in one bank. Love those questions from our viewers this week.
They are great questions and great answers, Alexis. Thank you. And if you want to ask Alexis any personal finance questions of your own, just leave us a message on our Instagram feed. She just might answer your questions live right here next Thursday.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.